So we have influence from the financial markets on the energy markets due to the fact that the financial markets are forward-looking. They basically look forward to economic growth, to inflation, to interest rates, and this can be 6 to 12 months in the future. And because of that forward-looking view or forecast, we have an influence from the financial markets, from portfolio managers that are buying also oil and CO2 in their portfolio to diversify the portfolio, to be a bit more aggressive sometimes. And at a certain point, when the economy, or they expect that the economy could grow, for instance, very strongly in the next few months, they will buy a lot of oil or a certain amount of oil, and they will push the price higher because of that. When in the end, today the market isn't necessarily tight, there's enough supply, the market is in equilibrium, and there's no real reason right now in the real economy to see that price increase. And it can also be the contrary. When everything they think will go bad, you can see a sudden drop that isn't something that we understand in the day-to-day market from a supply and demand perspective. And that's the oil market, but you have also the influence on the CO2 market. And there you have, for instance, fund managers who bring out strong statements about their view on the CO2 price, if it's not high enough, because there needs to be investments in the renewables. If they think it needs to be at 100, they will push that statement through the media, and people can start to buy CO2 certificates, when in the end the economy isn't that strong, for instance, and we don't pollute that much. But it's forward-looking. From the fund manager, it needs to be higher, and basically they influence the market. For a certain year, they need to buy the CO2 certificates, and they have 4 months time. And basically, when fund managers have a certain statement about the price that is potentially needs to be higher, they will be more nervous. They can panic more easily. They can buy at a certain point. And after 3 to 4 months, in April, after the month of April, we could see the market decline because those compliancy buyers don't have to buy anymore. And this is where you have the influence from speculation. There are other techniques that are coming from the financial markets, where we can, for instance, analyze the strength of a trend, the increasing force or the decreasing force of a trend, are statistics that we can use that were invented, you could almost say, in the financial markets. And this type of analysis will be used as well in electricity, in gas, and so forth.